Emerging market countries are once again under pressure. From the start of the year, we saw difficulties in particular for Argentina and Turkey. Their currencies were sold off extensively. But investors thought that these were particular problems for those particular countries and that there wouldn't be a broader contagion across EM. This week we are starting to see that. South Africa's rand sold off by 4%. That was an issue about the recession that appears to have emerged in the second quarter according to new data. But other emerging market countries have also seen their currencies decline, and there's been a new phenomenon, which is that indices of equities in emerging markets have also retreated. What is driving this? Still the fundamental issues about US dollar strength, which is driven by a strong economy and the expectation that the Federal Reserve is going to carry on raising rates. Plus, also the shortage of dollar funding as countries start pulling back from quantitative easing, and that is going to create a much wider problem for emerging markets. The other issue is that trade tensions with China seem to be growing. On Thursday, we see the end of consultation over the US imposition of $200 billion worth of tariffs on China, and that looks like triggering further tensions with China over trade. And finally, payrolls coming out of the US on Friday, which we will see further evidence of whether the US economy is quite strong. So all these factors are contributing to supporting the idea that emerging market countries are going to remain under pressure at least until the end of the year.